I still vividly remember that first moment in my trading journey when I couldn't bring myself to hit the stop loss button. At the time, the trade was only down around 3%. I stared at the screen, convincing myself it was just a minor pullback. It dropped to 5%, and I thought it'll bounce back. When it reached 10%, I began to worry, but my hope remained intact. It felt like sitting on a train hurtling toward a cliff, and yet I still believed it would somehow take off and fly. In the end, I closed the trade at minus 28%. The account wasn't blown, but my self-respect was utterly shattered. I'll never forget that feeling. Have you ever felt that way? A trade turns completely against your expectations, and even though you know you should close it, your hands tremble and your mind wrestles with itself. The pain doesn't come from the money you're losing. It's the haunting thought that you'll be the fool who sold at the bottom. You move your stop loss further away, searching for market excuses, convincing yourself that all it needs is a little more time. But the truth is, you're entering a downward spiral of self-sabotage that, if not escaped in time, could cost you your entire trading career. If you're feeling disappointed in yourself for lacking discipline, for repeating the same mistakes, don't be so quick to blame. It's not that you're weak. It's not that you lack talent. It's that you haven't yet understood the mechanics of your own emotions. And that misunderstanding, if left unchecked, is far more dangerous than any market volatility. Cutting losses is not failure. It's survival. It's a declaration to yourself that says, I won't let a small mistake become a devastating catastrophe. It's the ability to acknowledge your errors with clarity and make a decision before things spiral beyond control. Great traders aren't those who never make mistakes. They're the ones who know where they went wrong and dare to stop at the right moment. The first trap, one that I and thousands of other traders have fallen into, is thinking just give it a little more room. We tell ourselves the market needs time to recover, that a few red candles, a temporary news scare, or some short-term volatility doesn't mean we were wrong. So we hold on, not out of strategy, but out of hope. But hope is not a plan. Hope doesn't help you survive. The most dangerous thing is not a losing trade. It's a losing trade with no clear end. Then comes the second trap. It's not my fault. The market's just bad right now. This is a subtle form of self-soothing, a clever excuse we use to protect our ego. We blame macro news, big boys, mysterious sell-offs, anything but our own judgment. And once we begin to blame the outside world, we also surrender our ability to learn. We stop growing. We wait for the market to fix our mistakes for us. This mindset is common, especially among those who've had lucky wins. One big score on a reckless trade can convince you that you understand the market. But in reality, professional traders always have a plan B. They know when to cut, they have an exit strategy, and they never make excuses. They don't predict, they respond. They don't cling, they act. Then you fall into an even deeper trap. I can't cut now. It's dropped too far. This is the double loss effect. As the price keeps falling, emotions take over. Cutting now feels like admitting total failure. You hold on, not because you believe in the trade, but because you can't accept how far it's fallen. The more it drops, the more you hope. The more you hope, the deeper the loss. It's a vicious emotional loop that kills accounts. When you don't cut, you're no longer a trader. You're someone clinging to a stock out of desperation. Someone waiting for the market to forgive them. But the market doesn't forgive. It doesn't know who you are, doesn't care how much you invested, and certainly won't remember your previous wins. It only reacts to repeated behavior. Worse, you begin manufacturing signals to justify staying in. You open the RSI and see it below 30. Oversold. A reversal must be near. You look at MACD, about to cross. You draw trend lines, Fibonacci, candle patterns, anything to convince yourself to stay in. You're no longer analyzing. You're cherry-picking data to support what you want to believe. This is confirmation bias, and in trading, it's deadly. Then the ultimate fear sets in. What if I cut now and it actually reverses? I'll be the idiot who sold at the bottom. This is when ego destroys the account. You're not just afraid of losing money, you're afraid of being wrong at the worst possible moment. But professional traders know this. Getting stopped at the bottom is still better than blowing your account. They don't try to guess tops or bottoms. They act according to their system. And if the market really does reverse, they'll get back in with confirmation, not emotion. But if you still don't cut, if you keep holding out of fear, regret, or stubbornness, you'll reach the darkest part of the trading journey, where small losses turn into financial nightmares. A minus 10% drawdown won't ruin you, but minus 40%, minus 60%, or minus 80%. That takes everything: your capital, your confidence, your will to return. Traders don't get knocked out of the game for making mistakes. They get knocked out for refusing to stop when they know they're wrong. Cutting losses is foundational. It's discipline, it's survival, and it cannot be ruled by emotion. A good trading system isn't one that helps you win every trade. It's one that tells you what to do when you lose. And more importantly, gives you the courage to do it. Train yourself to cut losses as instinctively as breathing. Build that psychological muscle daily. Backtest your exit points. Practice cutting in paper trading. Write down your emotions after every stop loss. Don't measure success by how much you make. Measure it by how well you follow your system. Professional traders aren't trying to win big. They're trying to survive long enough to win sustainably. Finally, let me tell you a story. A young trader once blew up his account because he didn't cut losses. He was stubborn. He let emotions control him. He lost more than he won, but he didn't give up. He started over, writing journals, practicing discipline daily, trading with clear plans. Then one day, the market dropped hard, but this time he didn't panic. He cut the loss the moment his system said so. That stop, which felt like failure, became the turning point of his entire trading career. Do you see yourself in that story? If yes, remember this. Trading isn't a race to win the fastest. It's a journey of growth. And every time you choose to cut a loss, you take one step closer to respecting yourself and becoming a true trader. If this message resonates with you, leave a comment. Share your own story of cutting losses or the struggles you're facing now. I'd love to listen, because I know no one goes through trading alone. See you in the next video, where we don't just learn to trade, but learn to master our emotions and survive long enough to truly succeed.